5 reasons to be concerned about cryptocurrencies. Cryptocurrency interest has soared in the last year, and policymakers are struggling to keep up. Investors have poured money into large digital currencies such as Bitcoin and a burgeoning market of financial products linked to them, forcing regulators to develop new rules for a rapidly expanding environment. President Biden's newly named financial regulators have promised to crack down on any fraud or violence inside the cryptocurrency industry, although industry advocates say the government must establish transparent, consistent guidelines for everyone to obey. Here are 5 reasons why Washington is taking notice of cryptocurrencies. Prices that are soaring and unpredictable. Via 2020, when markets soared to record levels, big cryptocurrencies exploded alongside them. The price of one Bitcoin has soared from approximately $7,300 at the start of 2020 to $63,503 in mid-April of this year. Other popular cryptocurrencies such as Ethereum, as well as joke coins such as Dogecoin, experienced similarly meteoric rises, triggering a cycle of investor interest fueled by soaring prices and prominent one-time backers such as Elon Musk. However, the rally came to an abrupt halt this week, with Bitcoin losing $30,000, 2 months of progress, and 40% of its value since last Friday. If you're a crypto trader, you've almost certainly seen significant price declines in the past. However, this time felt particularly painful, Alliance Invest President Lule Demisi wrote in a Friday research note. Bitcoin seemed to be a textbook example of a crowded market that turned. Investors have jumped from Bitcoin to Ethereum to Dogecoin in search of the crypto industry's hottest trend. This week, crypto investors fled the market, with all 3 coins down 30% or more from their all-time highs, Demisi added. Major banks and investment companies that previously declined to deal with cryptocurrencies are now embracing them as a permanent part of the financial market, thus helping to legitimize the burgeoning technology. Following the Office of the Comptroller of the Currencies, OCC, approval for banks overseas to keep cryptocurrency for clients, the United States Bank of America, Bank of New York Mellon, and Citibank have also taken action to provide cryptocurrency services. Goldman Sachs, one of the first investment banks to accept cryptocurrencies, declared this month its intention to sell Bitcoin derivatives, a move that has alarmed industry skeptics. My larger concern is that these measures were not carried out in concert with all stakeholders. Nor do they seem to have been part of a larger regulatory perimeter plan. I agree that resolving each of these issues should be a priority, Acting Comptroller of the Currency Michael Su said during this week's House hearing. Platforms face growing pains. Although Wall Street titans have begun to dabble in the crypto world, the online trading platforms and applications that developed alongside the digital currency boom have encountered a number of technological and political roadblocks. Coinbase, the largest cryptocurrency exchange, and other firms suffered outages this week as a result of the crypto sell-off, and Binance, another exchange, restricted all but a few cryptocurrency option trades throughout the frenzy, prompting consumer backlash. The wild price fluctuations and technological problems that have resulted have increased Democratic legislators' suspicion about the credibility and protection of cryptocurrencies as investment items. Senator Sherrod Brown, Democrat Ohio, chairman of the Senate Banking Committee, urged the OCC this week to review previous decisions allowing some crypto trading and custody firms to sell some banking services nationally. A firm that cannot meet the stringent conditions that apply to other banks should not be permitted to present itself to the public as a bank, Brown said, adding that cryptocurrencies are risky and unproven. However, Peter van Valkenburg, research director at cryptocurrency think tank Coin Center, argued that the OCC's oversight is more likely to protect current customers of such businesses than to attract new ones. A lot of people are actually doing this, he said. Do you want them to use it through a corporation that is heavily regulated by the federal government, or do you want them to do it through a foreign exchange that is allowed anywhere? And they inevitably will. Cryptocurrencies, according to some analysts, are nothing more than tools for money laundering and fraud. Although these are far from the only existing or potential applications for cryptocurrencies, high-profile instances of cryptocurrency-related crimes, such as the $5 million Bitcoin ransom demanded by suspected Colonial Pipeline hackers, have stoked fears about regulatory gaps. Since the cryptocurrency industry does not come neatly under the purview of any single state or federal regulator, it is difficult to establish uniform rules or crack down on possible criminal activity. The Treasury Department is in charge of raising cryptocurrency taxes and enforcing anti-money laundering regulations. The Securities and Exchange Commission regulates some investment offerings involving cryptocurrencies, while the Commodity Futures Trading Commission regulates others, in part because digital coins blur the distinction between securities and commodities. And, while federal bank regulators will oversee how their supervised firms treat cryptocurrency, there is no federal agency authorized to control spot cryptocurrency exchanges, requiring several firms to obtain state-by-state certification from money transfer supervisors. While this is novel, it is incumbent on those regulators to grasp it because this is not going away, said Ethan Silver, a partner at the law firm Lowenstein Sandler. Increased revenue implies an increase in taxation. With more investors purchasing more cryptocurrencies for a higher price, the IRS has increased its efforts to educate crypto owners about their tax responsibilities. The agency created a buzz in 2019 when it detailed how crypto investors, many of whom were unaware, would be required to register investment profits and eventually pay capital gains taxes. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.